Good morning and welcome to Money Sense. I'm your host, Neville Hicks, alongside Christoph Barnett.
Good morning.
We've got a topic that's near and dear to a number of people in Cayman's heart. It's an asset class that we all know and love and or hate at times. We're here talking about real estate and specifically the local real estate market. We've got kind of an esteemed guest list panel of diverse real estate backgrounds. So to my left here, I'll start with Stefan Pryor with Team Property Cayman at RE/MAX. Welcome.
Hey, welcome. Thank you. Thanks for having me. How you doing?
Very good. Very good. And next to Stefan, we've got Tim Naylor, who's with Avita Property Management and kind of specializing more on the property management, strata management, how to maintain the value of your real estate asset. Welcome, Tim.
Thank you, Neville, and thank you for the invitation.
And then to my right, we've got Michael Tracy, who's head of valuation at Bull Consulting.
Morning. Thank you.
So with that, I guess before we jump into kind of what's going on in the local market, we've obviously seen a huge run up, which has been, I guess, a welcome change over the last certainly the last kind of 5 to 7 years. Maybe we'll talk a little bit more about real estate as an investment class. And so, Christoph, what are the characteristics of a real estate investment when we look at, I guess, brick and mortar, structure in investing in real estate?
Well, this is an important topic to think about because each asset, what defines an asset class is the characteristics that are specific to that asset class. And so when we talk about real estate, there are some specific issues versus other asset classes like stocks and bonds that you could also invest in. And one would be the specific asset identification. So when you go and buy a piece of real estate or look at a piece of real estate, it's a specific property you're looking at. That's very different than when you're looking at a share of stock where there might be thousands of those out there. So what does that mean? There's one, and so you need a buyer and seller to agree on that one piece. Another issue is a major issue is the liquidity. So if you have that one piece of property, you need people to agree on that specific, and you have to have them buy willing buyers and sellers. Well, that's different from a stock where you have maybe hundreds of willing buyers and sellers at any one time because it's not as specific. Another issue is the return stream. When you buy a company, an equity, you're expecting you have to look at the profits and the dividends that the company is paying out. Whereas in a real estate, the two ways to make money is if the price appreciates and you can sell it for a higher price than you bought it, or there is some returns that can be gained through renting the property.
So income streams.
Yeah. And so there's just different aspects. So we talked about three things there: specific asset identification, liquidity, and then the different earning types that sort of separate that from other asset classes.
Certainly, and that's a good overview. And I think if we focus specifically on the Cayman market, Stefan, it appears, it certainly seems that we've seen a huge ramp up in the last 18 months to 2 years.
Massively, yeah.
What if you could just give us kind of a broad overview of what's going on in the market? I think that'd be helpful.
Yeah. So, rightly said, the property market has almost exploded in the last 18 months, 2 years, coming out the back of a fairly stagnant sort of market during the recession 2009 plus, where people were just kind of sitting on the fence, not really buying, whereas now they see themselves in Cayman long term. They're willing to invest their money. Banks are lending again, which has caused a huge surge in market activity.
So that's activity, prices, and rents.
They all kind of go hand in hand. So it boils down to supply and demand. Everyone's buying. There's an undersupply, and therefore properties aren't staying on the market as long as they usually would. Whereas the average sale time for a property Cayman is about a year.
Wow.
Whereas now and Mike can attest to this, now properties on 7 Mile, if they're correctly priced, are probably selling within 4 weeks, or certainly under offer in 4 weeks, which is a huge shift.
I think that's important. I mean, you mentioned correctly priced there. That's something that's certainly important, and that's maybe something that hasn't happened in previous years, where people's expectations of price haven't been properly managed, which has led to a lot properties sitting on the market for a lot longer than they should have.
Yeah, which doesn't do the market any favours. And certainly one of my jobs as an agent is to price a property correctly so that it sells in, a reasonable time frame. Whereas people say properties in Kinman, they're not that liquid, they take so long to sell. Whereas actually, if it's priced correctly, first time around, it will move. Absolutely.
So how do you determine if it's correctly priced? Like, what do you think about when you
employ a good valuer?
Simple.
I mean, you've got to take the specific merits of the property into consideration and what the market's doing. At the moment, a lot of people are trying to buy, therefore, you may be able to get slightly more for your property. And something that we're seeing at the moment, which we haven't previously seen, is multiple, almost bidding wars, which is kind of unheard of in Cayman. In big cities, yes, you get it, but here, generally, with the market moving so much slower, you don't tend to find that. But now we're receiving multiple offers on properties, and they're selling much quicker and for quite often over asking prices.
Right. Well, let me jump in there just in terms of the valuation, because another aspect of the asset class versus a more traditional stock or bond investment is that you can specifically influence the valuation, right? So Michael, what are some of the things that an owner can do to increase the value of their property?
Or even over to Tim on the more of the asset management side.
It's true that when you're looking at various properties, if you see one that is clearly professionally managed, you're going to veer in that direction against one which is in a physical poor condition.
And so what does that mean? What do I look for if I'm a buyer or if I'm the owner? What does it mean to have it professionally managed? Like what do I do differently?
As a prospective buyer?
What do I look for?
You ask the right questions.
Okay.
If you're looking at buying a strata, you ask to look at the financial accounts.
Mm-hmm.
You can physically see the appearance of the building, and defects will stand out immediately. But you need to look deeper than that and look at the financial accounts of the strata corporation. Is it in a good financial position, or is it in a poor financial situation? It strikes me frequently that prospective buyers don't ask these questions. But it's not a difficult question to ask. Our involvement as a property management company is restricted to, can you prepare a Section 6.4 agreement, which we do, but we don't get buyers digging deeper than that. And that always surprises me, because
people are worried about the cost of their strata fee, and I'm sure Stefan gets this as well. They'll say, how much is the strata fee, but they don't actually look at what that strata fee is going towards. I mean,
or what it includes.
Yeah,
right.
And in the past, what has it been towards? Is there a sinking fund for repairs? Is there a sinking fund to pay the deductible? Which are more important questions almost.
Well, yeah, and when people are coming to me to look for properties, some of their requirements will be, a reasonable strata, monthly strata, but actually, those that have a higher strata are generally much better managed. That money is being pumped back into the property to ensure it's well maintained.
A corporation needs to be operated as a company. There is a revenue, which is your strata fees, and there are expenses. So your revenue should at least match your expenses on an annual basis.
Certainly.
And it needs an organisation to prepare a budget to ensure that you have that situation. And ideally, your revenue will exceed your expenses, so you can build up a sinking fund. So unforeseen capital expenditure can be met in the future, rather than having to go out to all the owners and say, we need a special assessment to redo the pool or whatever.
Yeah.
But it surprises me that prospective buyers very rarely ask these questions.
Right. I think to Christoph's point, I think similar to any asset that you own, even your car, you got to go get maintenance done on it. Your home or your property investment is much the same. If you let it deteriorate, I mean, and stuff, let's be honest, we're near the ocean. The salt water does a tremendous amount of damage on property. Stuff needs to get replaced, but if you're not replacing it and creating continued investment, I guess over the long term, you're going to have an issue probably selling that property.
Yeah, and in investment property, that's important also. I mean, you look at the condition of property, and that's going to affect the rental income you can get. And if you're looking at commercial property as well, it's particularly important, because the value is based on the income that you receive. And if that property isn't well maintained, and the tenants aren't retained, then the rent can fall, the retention can fall on all of these things in an investment will infect the investment value in the long term.
Yeah. Now, we spoke a little bit about the strong, there's definitely some momentum behind the market. What's the real tipping point? It seems, it seems as though everything was kind of ticking along, and prices weren't really going up. Certainly over the, if you looked at really 2010 or even before that, 08 to 2015, that's a big time frame. Other than the general economy, what else are driving these factors, and are these factors able to persist?
Yeah, I would say one big factor is population growth in Cayman. People are returning to the island. The island population is growing. These people all need properties. These people all need properties to live in. And then you've got the investment with big corporations such as DART, with the Kimpton effect. There was an article published, the expansion of the airport allowing more passengers to arrive to the island. So the culmination of all these things have helped, stimulate the property market over the last 18 months.
You've got the closure of certain elements as well. Treasure Island had a lot of short-term longer-term rentals for studios, and when that closed for refurbishment, there was a shortage of accommodation, and that was fueled as well by the people coming in to work in the Kimpton, and possibly that will happen again when the Margaritaville opens, and if these other hotels that are planned, if they open, you're going to have, as you said, more people, and these are people on lower income looking for rental accommodation, and that pushes rents up, which it will push rents up across the board as well, and people will see that you can get a higher return on your investment, and that will spur them on to maybe looking to pay a higher price, and it's kind of self-perpetuating as well, in terms of people are seeing values going up and thinking, okay, now things are starting to move. It's worth buying. Whereas the previous barriers to entry are coming down.
Yeah,
right.
Yeah.
And I guess we spoke a little bit about it before the show started, but it's interesting. You guys are heavily involved in the property market, but I think what's fascinating, certainly for myself and Christophe on the investment side, we look at. We can look at benchmarks, or we can look at, a significant amount of data. There's no question that we see it feels like the property market is going up. We're seeing, transactions close quicker, and we can speak to agents and we can speak to professionals in the valuation side. But, how do we actually know, or, do we have to just take the word for it, or just is it that general sentiment? Is there a database?
You've got to be a bit careful when you talk about the property market going up, because the market isn't a market. The market in Cayman is made up of many different markets and many different pockets, and
certainly,
and there's many pockets which in fact haven't gone up, and some which continue to stay static, and some even are lowering in value. But again, that might have something to do with the state of repair of those properties as well, and I think there are pockets that certainly haven't seen any movement since the recession, and there are others which have seen tremendous movement.
So what are some of those areas that have seen appreciation?
From a valuation standpoint, certainly we've seen very large increases in recent times in the 7 Mile Beach condo market. There's certain complexes where we've seen sort of 30% growth in the last 18 months.
Wow.
And then you can look back at some areas such as, when you get a bit further east, the Lower Valley, Bodden Town, some of the sort of more inaccessible areas to professional working in 7 Mile Beach or in Georgetown, where there's been very, very little growth, if any growth at all, and there's still an element of foreclosure properties on the market, which are causing a drag still in those areas.
And I think it all comes back down to kind of real estate 101, location. And like using the services of a real estate professional to advise and guide you, so that from an investment standpoint you do make the right decision moving forward. And though everyone's got access to the data, but having somebody in the market that's been there for years that is able to help and guide you is going to stand you in much better stead.
So just touching a little, I think that's an interesting point just about the different pockets. And I think, we look at markets and particularly the real estate market here, and Michael, you raise a good point that whilst we have generalized in saying that the market has gone up, that there are different pockets, and it really gets back to Christoph's point in saying that the first part of an asset or real estate asset is really the individuality or the idiosyncrasy about that asset. So where is it located? What are its features? Has it been well maintained? So we're going to talk a little bit more about those areas and kind of how to improve your asset, along with where are certain areas to look to invest coming up. But we're going to take a quick break, so please join us for the second half.
This is Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands and sponsored by One Trade X.
And now, more Money Sense.
Good morning and welcome back to Money Sense. I'm your host, Neville Hicks, alongside Christoph Barnett. Good morning. We're joined again in studio with Stefan Pryor, Tim Naylor, and Michael Tracy, and we're here discussing Cayman real estate. So picking up from where we left off, we were talking, real estate 101, supply and demand. When I look at, I certainly driving through South Sound, I see, all these signs for new development. I see a significant amount of construction. I've heard rumors about other things that are going up and other things that are happening. What, if we look at supply and demand, obviously the construction period of these projects can take anywhere from a year to 3 years to come online. And they're different markets. Some are very high end, some are lower, middle, some are lower. What does all this supply mean coming online? Is that going to have a material impact on prices?
Yeah, ultimately it will. And I mean, I can think of, 25 plus developments coming online, either, that have broken ground and that we can see, or that are coming through planning at the moment. So everyone's concern is naturally, is there going to be an oversupply? What's going to happen to my property prices? But actually, with the population growth, there's a slight lag time between properties being built and actually coming onto the market. And with the population growth in Cayman, there's a huge demand for these type of properties. So the property market will continue to uptick at a steady pace.
Yeah, I mean, I think we have to look at exactly how much is coming on, and where it's coming on. And at the moment, as you said, South Sound is seeing a large amount of growth in the smaller condo type developments. Ones that are happening like the Vela, and then you've got ones that are in planning or are being built, such as Tides and Finn, and they're all slightly different markets because of the different price brackets, but. Most of the condo development, I think, is going up in South Sound because at the moment there's very, very little planned at all in the 7 Mile Beach market, and so are people going to be prepared to move from buying in 7 Mile Beach to South Sound? And I suppose that's a question that everyone's sort of waiting to see at the moment.
Yeah, I think we're kind of seeing it already. I mean, yes, not everyone wants to be on 7 Mile Beach, but it's one of the top beaches in the world. But there is a slow migration towards South Sound, and in reality, you're actually only still 10, 15 minutes. But everyone out here kind of throw their hands in the air at being stuck in traffic for 20 minutes. But ultimately, the land there is cheaper, and the condo developments that we're seeing, such as your Vela and San Sebastian, etc., there's been a huge demand for those type of properties over the years. Families, 1 bedroom, 2 bedrooms, and so they are being snapped up pretty quickly, and they're affordable, which is the main thing. Whereas a lot of your 7 Mile Beach kind of watercolors style developments and the Kimpton, are not affordable for a lot of people.
So that would be mainly American buyers or people coming into Island who are using Cayman as more of a vacation.
Yes.
rental or semi-retirement.
Second, third, fourth, fifth home. I mean, I'm sure a lot of people in who are buying in watercolours aren't living there. And you can just see by walking down the beach nowadays, apart from at Christmas, how many lights are on in some of these condos where people are paying 3, 4, 5 million.
Yeah.
Not a lot. You know, you get a lot of snowbirds, as you might know.
And I think you need to look at it from a regional perspective. And Cayman the fundamentals are so attractive here compared to some Caribbean locations.
Right.
And that is obviously going to hopefully support the growth that Stefan is talking about.
Yeah. And you have some good perspective because you've been in Turks.
I was in Turks for 5 years. I was in Bermuda for 5 years. Obviously, Bermuda, you have huge restrictions on foreign ownership. In Turks, you have an unstable, historically, government, which is now improving. Security issues. Cayman, the fundamentals here are much stronger. And as a US investor looking for a property as an investment to pop down 2 weeks of the year, Cayman is very attractive.
Yeah,
it's accessible, and it has a stable environment which people are attracted to.
Yeah.
So that's very
it's
positive.
Not solely reliant on tourism as well, which a lot of the other Caribbean islands are.
True. And it's got 12 months of the year. Bermuda, for example, it's 3 months of the year you'll be on the beach. The rest of the year you'll be not on the beach. So it's positive.
I think and something that's worth discussing, and we kind of see this spill over either from 7 Mile Beach. Obviously, land is scarce, right? If we look at 7 Mile Beach and that kind of pencil of land that goes, connects West Bay with South Sound. It looks like we've seen land and development kind of more or less fill up. If you look down the 7 Mile Beach corridor as far as beachfront land, there really isn't. I can think of 2 pieces maybe that are undeveloped.
There's really only two larger parcels that are undeveloped that aren't owned by DART, of course.
Right. And that spillover appears to have gone to South Sound. But when does that spillover or those price appreciations really start to kind of fall into Prospect, Savannah?
In fact, they have. I mean, again, if you're talking about pockets, one thing that I didn't mention earlier, I'm sure Stefan can confirm this, is that actually all of good beach land or land on the ocean has seen a large uptick as well.
So whether east end or north side,
anywhere really on the coast, even when we talk about these areas that aren't seeing rises, I'm not referring to a seafront land or beachfront land, because in fact that has seen strong growth as well. It's the inland areas.
Yeah, and I think actually one issue that, or not even an issue, one factor that plays a huge part in that that appreciation is the road networks. So such as the new bypass to West Bay oceanfront land has seen huge appreciation as well. And I think you talk about the trickle-down effect to Prospect and beyond. I think once the new road networks get in there and traffic is alleviated, that will certainly help property prices appreciate, because at the moment Hurley's roundabout is a really big sticking point for people. Yeah, right. It is. And when I'm working with clients, they say, right, I'm willing to go from 7 Mile Beach up to Hurley's roundabout. They don't want to go any further. But as that new bypass is sort of coming in, once that's all finished, I think property prices further out will start to appreciate.
But you both can probably comment on the fact that Grand Harbour has seen an uptick. Tim managing that, and obviously you've recently sold a property there as well, and I was surprised.
Yeah, I mean, people want, water, like you said earlier, waterfront, oceanfront is always going to be in demand, and people... property prices in your Crystal Harbour, Governor's Harbour sort of area is pricing people out, and therefore they're moving to places like Grand Harbour, which are seeing some huge properties being built, and huge appreciation of properties.
And it's getting a lot better.
We actually have waiting lists on a couple of developments that we manage, condos, and they sell within 2 months. I know Stefan mentioned a year is the average selling period, but Grand Harbour is now a highly sought-after area. And it's still affordable when you look at its accessibility to Georgetown, 2-bedroom apartments,
And I mean, that year sale time is a broad average. That is...
certainly.
Exactly. That's every property on island. And some of those will be second, third properties for people. If they sell, great. If they don't, no harm done. They'll just hang on to it for another year.
There are people that will live in a property and just put it on the market
take a punt
in hope
hopefully, right.
that they don't have any strong intention to sell, and that happens quite a lot, I think.
Exactly,
right?
which is kind of distorting the figures on the sale time, really.
I think it all comes down to what is priced correctly, and there's where you need to, you can't just wake up in bed and go, okay, well, I bought this for 200,000 2 years ago. It must be worth 300,000 now. And you got to use professionals, whether it's agents or valuators, to kind of rely on improving your assets and not only that, maintaining the value. I think what's interesting, and Christoph, maybe we look at stuff from an investment standpoint. So real estate as an asset class, how much real estate should you own in your portfolio if you're talking about an individual investor?
Well, or
what should you consider?
It's a bit of a sticking point when people hear the number, because the base number that we have to look at is sort of in comparison to the availability of other asset classes. And I haven't confirmed this number recently, but I think it's about 10% when you look at the world investable asset class of real estate versus all the other opportunities. And so if you were just to say, I want to spread my money across the asset classes of the world, 10%. Now, what happens is most people's biggest asset is their home, and so they've blown past that 10% a long time ago, especially considering that they use leverage. So some people might be more than 100% of their worth if you look at just the asset price. I mean, it is what it is, because part of that specific asset identification is that it's a big ticket item. You can't go in there. We were talking about this before we got on air, but you can't go in there and say, well, I want to buy 10% of that house, right? You got to buy the whole thing or nothing. Right. And so it ends up being a big part of the portfolio. Mm-hmm. Now, for people, where it becomes important is when you have a larger financial portfolio to keep it in context. You don't want all your money in real estate. You don't want all your money, talking about location, you don't want all your money in Cayman property, nice as it might be, right? Just as a prudent investor.
You're talking, what happens if an oil ship comes by and
I mean, God forbid, right? Cayman's a paradise, but paradise is fragile, right? And so it's something to think about.
I'd say actually on that, one very interesting thing which has happened, relatively recently, in order to offset the, your mortgage payments, etc., people are renting their properties kind of very short term for the Christmas period or whatever else, in order to generate some income. So therefore that takes a somewhat of a liability for your monthly mortgage payments, and flips it into an asset.
Yeah, and I think we could probably spend another hour and a half here talking about the market. I mean, the good news is we've seen it on the uptick. I think it's a general, a positive thing for Cayman. I think we've seen a lot of good developments that are supportive of a continued strong real estate market. I think, to Christoph's point and wrapping it up, I think we need to look at real estate as an investment in the context of our total portfolio, understanding the risks. To Tim's point, really making sure that we're on top of managing that asset and looking at that, and Stefan's point about what is the exit strategy, and really employing people around so that you're informed when making what is oftentimes probably one of the biggest financial decisions of your life. So on a final note, before we leave, once again, I want to thank all of our listeners for joining us today. You can hear this recording as a podcast on the CFA Society webpage. We encourage anyone who has questions or show topics to send us an email. It's moneysense@candywacky.ky. Also, you can follow us on Twitter at MoneySense Radio. So let us know if you have any questions. Once again, we want to thank you for listening, and we'll be on again in 2 weeks. Have a great day.
Money Sense is brought to you with the support of OneTradeX. OneTradeX, the Cayman Islands' #1 choice for online brokerage.